Holy moly, gold got hammered this week, specifically just on Friday. Is it heading lower? Let's map out some key levels. Let's find out some good areas of opportunity. That's what today's video is about. Why did gold fall so hard? Well, the jobs report came out. They added 943,000 jobs in July, signaling a strong labor market. They also reported that the unemployment rate declined to 5.4%. Now, there's a couple fears out there still, right? There's the inflation fears and the delta risk. We still don't really quite understand, what it's going to take for Fed Powell to start the taper program, even though a lot of the Fed speakers and members are starting to talk more about tapering. And I mean, the market has just been levitating higher and higher because of this very loose monetary policy. And what I find so interesting here, as the Dow rose, to all-time records, it closed at an all-time record on the jobs report, so it's signaling a very strong economic recovery, and even the S&P 500. So why do we need to maintain this amount of tapering? Well, I don't like to, try to speculate and create all these narratives. I'm just reporting on what's actually taking place here. But what I found so interesting was, well, the 10-year, this is a monster move in the 10-year, and if you just look at implied volatility in the bond market, it is very large, especially when you compare it to like the Qs or the SPY. And this type of price action is not good for gold. Gold took that big hit to the downside, and you can see that dating back here when the 10-year was rising, right? And then gold was just falling, and then finally when it started stalling out, gold went up. Now, is gold going to head farther down? We're going to map out some key levels here, but just know that this right here, if it's pricing and tapering, you need to think about, okay, if the Fed actually comes to tapering, say, if we get another strong jobs report, the market has been rising and rising. The equity markets, okay, have been going higher and higher and higher. So if you start to take that punch bowl away from the party, chances are we're sitting in an area where it could be actually not good for the equity markets. And at that time, what will gold do? Maybe perhaps people will focus on risk off type sectors and assets if and when that actually starts happening. But before that does, you can see that gold has been heading lower, potentially pricing that in already. So when the flip takes place and taper does happen, or even if it doesn't, it still seems that gold is going to be a huge opportunity. Now, also to note, what did the dollar do? The dollar had a huge day today, but it's still relatively flat. Now, we are up on the year. If you look at the year-to-date basis on the price of gold, it's down 7.6%, and the dollar is up right at around 3%, and we have an area of resistance right up ahead. If we start breaking through that, the dollar can head higher, and it can head there fast, too. This could be a little cup and handle pattern, potentially trying to break out, and that would put more pressure on the price of gold. Another thing that I noticed that I called out on the previous gold analysis video was the possibility of a head and shoulders, an inverse head and shoulder pattern. You have a left head and then a right shoulder right there. So this is still holding as it stands right now at some key levels. However, if we start breaking down, I'd say past 1700, then this head and shoulders is no longer really applicable at that time, so we'll have to match out key level. All right, this is on a monthly time frame. I like looking at gold as a long-term investment because gold is something that I do believe can't really go down significantly farther than this fourth level right here. I mean, it's always possible, but I just don't see that being a problem because I do believe that, yeah, even if we have a deflationary impulse, I still think inflation is here and it's here to stay, okay? So, which would mean stagflation, a stagflation in inflationary environment. So where are the key levels? 1675 on the monthly time frame. We're down 2.98%. So I am looking, if gold were to break this 1750 level, I think that it's very possible for it to come down to around 1675 to 1725. To 1675 to 1700. This pink box right here. Okay, it acted as resistance, then support again. So if it comes down here, keep an eye on that level. If that cracks, our next level is 1575. This pink box is zone right here, so screenshot that if you want this. And then the next zone after there, you can see it acted as support, and also resistance, 1450. And if it were to come down even lower, this would be just an amazing opportunity. I would be ready to back up the truck right here. But we had it come out of a big, long multi-year range, and it really exploded to the upside. So I would imagine this would act as a very strong support right at around 1350 to 1375. We had resistance, and then when we broke out, it really went screaming. So that's always a possibility if we get some crazy deflationary impulse, and be ready to purchase if it comes down to those levels. So those are the key levels that I am keeping an eye on. Yes, to me, it looks like gold could head a little bit lower, but this is one day of the jobs report isn't enough to see of significant trends. We've seen the bond yields jump up high like this and then revert back. So one day doesn't change a trend. We need to see how the bond market responds to all of this and how it handles this elevated level of implied volatility. Today's video is brought to you in partnership with STARR Mining. They are a Canadian-based exploration company that are focused on the acquisition and exploration of high-value gold projects in Canada. The company is also committed to creating long-term shareholder value through the exploration and development of their recently acquired Normetal property located in the mining-friendly province of Quebec. They trade in the U.S. market under ticker symbol STRPF, and they can be traded on any of these brokerage firms that you see right here. The story here is quite interesting with STARR Mining. A company called Amex Exploration hit some big holes, and STARR owns not only the property right next to them, but also the crown jewel of the region, the past producing mine where modern drilling has never been conducted, and that's where the mother lode, the main vein, the source of the mineral riches, is believed to be. Now, overall, the market has been seeing some weakness and flatness, but STARR Mining has been defying gravity during all of this time. Its momentum has been really real, and it's because that their projects keep delivering great drill results. It's a big under-the-radar winner that has the potential to become a huge success story, even more than it has already become as of now. The stock is up somewhere around 60% in the last 6 months and about 69% up in 2021. However, it did have a peak of around 151% up just in the year 2021, and the stock in the last 12 months is up around 80%. As of recently, you can see here the price has been pulling back, and it's coming into a previous area of resistance, and you can see here it acted as support. There's another level down here at around between 170 and 180 on STARR Mining. So there is a possibility that we can pull more. However, what I do like seeing is that this is forming a big bull flag right here. So we're going to watch to see if this continues to move. You can see the price percent oscillator here did cross over to bullish. It's still below zero at this particular point in time. But as of right now, the price did just get back above those shorter term moving averages. So a breakout of this really might accelerate another leg higher. The location of their property is critical to their opportunity. Canada's Quebec province, a massive 1.7 million kilometers. It contains one of the most diverse collection of metals in the world. Only 1% of it is being mined, and only 5% is covered by mining rights. It's a mecca of gold, silver, iron, nickel, titanium, copper, and zinc. Now, within Quebec, these projects are in the mineral-rich subprovince of Abitibi, one of the most prospective geological terraces in the world for gold. Quebec is one of the most attractive provinces for mining, especially gold mining, because a large percentage of the province has a geological formation well known for its deposits of gold, iron, copper, and nickel. Together with Ontario, Quebec accounted for around 75% of mined gold production in Canada in 2019. A crucial component to STARR Mining's story is that they discovered something very rare. It's called a VMS, a volcanogenic massive sulfide deposit, with rock containing multiple base metals, including zinc, copper, silver, and gold. So STARR was after gold, but what it encountered on its first drill hole was a lot more. Now, the way that this story developed is that another company acquired a property in this area and hit a huge hole containing gold. Before they could even announce it, STARR bought another land package adjacent to the company called Amex Exploration. Once that company hit that epic hole, its share price gone from 6 cents to around $3.90, which was like a 65,000% move in just around 3 years. While that opportunity has pretty much diminished, STARR is just beginning, and it's almost as if someone had missed the 2009 low, but was able to get in at 2016 bottom. Because of the strong drilling results that STARPeak had announced in recent months, an unprecedented collaboration has happened right before STARPeak announced its maiden drill results with evidence of a VMS discovery. The chairman and founder of AMEX was appointed as STARPeak's chief technical advisor, which is a seasoned geologist with experience on VMS type deposits. Now, because of the major success of its drilling program, the company just announced that it has increased its fully funded drilling program by from 20,000 meters to 40,000 meters on the Normetal project. The best place to find a huge gold deposit is right next to another mine. So it's critical to keep in mind that this was an original strategy of both AMEX and of STARPeak, was to purchase a project right next to the past producing Normetal mine. Contained within the property is Normetal, a mine that has produced more than 10 million tons of ore containing gold, silver, copper, zinc between 1926 and 1975. The mine was so productive that a town of the same sprang up around it. So for STARPeak, this is like drilling in a treasure box. There's really no better narrative than a fully funded junior miner making a discovery and looking to de-risk in this exploration phase. In contrast with a big miner making a discovery, which doesn't really move the needle on the valuation. The whole upside potential here is tied with the upcoming drilling results. So the fact that the company is currently increasing the drilling and moving rigs to double down on their success puts the company in a perfect spot, because a tiny junior miner sitting on a single exploration play is high risk, but also high reward potential, because unlike a big miner with varied operations all over the world, it can go from 0% to potentially even 1,000%, depending on their ability to prove out the result and demonstrate commercial viability. Now, this is a low-cost advantage because in mining, everyone is selling the same product and the market decides its price, and the management can only control how much it spends. And the more the area is developed and westernized, the better. STARPeak's project only enjoy 1, excellent road access, 2, power lines through the middle of the property, which is important, 3, availability of ample water for drilling, and also number 4 is Normetal town for skilled labor and accommodation. So this is a huge catalyst to bear in mind. Also is to date, the company only spent around 3 million Canadian dollars on drilling, and that's really nothing for comparison. AMEX, the company right adjacent to it, the company with the gold project we previously discussed, that struck it big. They've already spent 15 million, which is 400% more than what STARPeak has currently spent. Now, the beauty of it is that STARPeak Mining are literally using the same geologist on their property who have made the AMEX discovery. Pretty smart. The VMS deposit that we already talked about are very valuable. Those unique deposits are rich in base and precious metals such as copper, zinc, gold, silver, and only a few VMS deposits have been discovered in the last decade, highlighting the strategic importance of STARPeak Mining's discovery, and one that is likely to attract a lot of senior miners and investors. So in other words, this could be so much interest from big miners that a buyout talk may take place, which is really one of the best exit strategies for a junior miner that they can ask for. Now, the company has already seen incredible drill results thus far. Something to note was the drill holes return intercepts of good gold, silver, copper, and what was interesting was the zinc at 20.94%. Now, 10% zinc would be considered high grade, 20.94% is phenomenal. The company has no debt and enough cash to keep drilling for more than a year. STARPeak Mining's management team has also been strengthened by the addition of Yves Rougerie as Vice President of Exploration. Now, Mr. Rougerie brings 40 years of experience in the mining exploration and development business, including as President and CEO of Vision Lithium. He was responsible for the initial discovery of Berry Lake Gold Deposit and also participated in the discovery and definition of Arev's L uranium gold deposit. To find out more about STARPeak Mining, I put a link in the description below to their company website where you can pull up their corporate presentation. Once again, they are traded in the US OTC market under STRPF, and you can trade them on any of these brokerages you see here. Any big US brokerage should just be fine.